What's up, everybody? Good to see you once again. Got a new indicator slash strategy want to share with you here for everyone to learn with. These are part of the free instructional videos that we put out. We want everyone to learn how to trade a little bit better. No one should charge you for that in specific. So today we got a pretty cool one. It's called open interest. If you haven't ever heard of it, you're about to. Let's get into it. All right, so I've got a standard TradingView chart pulled up here. What chart do I have? I have Binance Coin USDT perpetual futures chart. Now, why did I pick that? Well, this is important because this isn't going to work for every asset. This is only going to work for assets that have a perpetual futures chart on TradingView. All right, if you can find one, then it'll work. And I'll show you what I'm talking about. If you go up here to your charts and you want to decide the assets you want to pick, let's do Binance Coin, for instance, or let's do Bitcoin, BTC USDT P, and this is a perpetual futures chart. Once you click on this, it'll pull up here for you. All right, now the actual indicator will work. There's two ways to do this. I'm going to show you both ways. Okay, now I'm going to show you the easier way first, the way that you don't have to pay TradingView for. All right, let's get on that one first. Indicators, simply type in open interest, and right here at the top it is. I've already put a star beside mine. Right here is my favorites list. I have a whole bunch of them that I use at any given one different time. I'll change what I'm looking for, change what I'm doing, etc., etc. Okay, what works for me may not necessarily work for you. Just giving you a helpful strategy to kind of be on your way with. All right, so once you get that, this is what you get at the bottom. What is this at the bottom here? Let me move my camera for a moment. This is the amount of open interest. And right over here's the dollar figure, $527,000 worth of open interest on Binance Coin futures on Binance right now. Seems like a lot, doesn't it? Well, it's actually low compared to some, and it's actually 5 times more than Bitcoin, which is pretty darn crazy. Not really the point. The point of what we're going to talk about is how to use it. This measures the amount of open interest or the amount of money people are paying to keep their contracts going. All right. What we're going to be able to see here is some strategies and some switching that goes on. By backtesting it, you can see it yourself, of some different ways to kind of know it's coming and kind of be able to ride the wave a little bit better than you may or may not have ridden it before. All right. So where did I get this from? This is the next part. So if you look up who Larry Williams is, he was a very smart guy who come up with a ton of different strategies to trade with. Whenever I first started trading, I did it the wrong way, right? I screwed up. I started immediately trying to leverage trade, didn't know exactly what I was doing, and I got destroyed. I got wrecked, right? There was a lot of things that I did wrong looking back, right? Well, at the time, it's easy to say that because, of course, hindsight always wins, right? But the point is, if you can learn this now, you won't have that same hindsight issue. It'll never have to come up for you because you'll already know the helpful strategies to not let that happen. Okay. So open interest is a key here because you start to see how much people are willing to pay to make sure they stay in whatever's going on. This is trend dependent, and I'll show you what I'm talking about now. So I'm going to go to a different one, and this is going to have a chart up on the screen for you to be able to read as well. We'll use Bitcoin for the example here. I'm on the weekly chart. Right here's weekly, as you see. All right, I am in logarithmic mode. Right there in the bottom right-hand corner, you can see log lit up in blue. I'm in logarithmic mode. So this is the chart that kind of determines what's going on. This kind of works on divergence and convergence, okay? It kind of gives you a sentiment for what's happening. As you see on the bottom, this meter here is rising, and I'll go full screen on it for you here so you can see. This is clearly rising. I don't think we can debate that. This is more money and more money and more money being put into the system to keep their contracts open. They're paying to stay in this trade because that's what you do when you do a futures trade. That funding fee, the little clock that runs at the top and goes off 3 times per day, this is what they're paying on, okay? To the tune of, on Bitcoin here, 166 racks worth. Right there it is on the top, 166,000, okay? So, if that's the case, please understand that they're paying a lot of money to put this up and keep whatever is happening going, right? So let's determine the trend. In a previous video, you can find on the instructional videos here that you've already watched, which is trend identification, You can clearly see that Bitcoin is in a downtrend here. You have downward momentum on your price, right? So right here is a simple basic chart to show you what you're looking for. We have falling price right here, falling price. We have rising open interest, rising open interest. This is a short buildup, meaning people are putting more money in to keep their shorts going. They haven't switched over into longs just yet. They're throwing more money in and more money in and more money in because they want to keep those shorts going because they can see the trend. This is a bearish signal. This tells you that the people with the most money that are willing to risk the most aren't willing to stop. Until this changes, you should stick with it. You should follow the trend that it's giving you. This is a continuation pattern. I'll write that right here for you so that you can remember it. Whenever you go back to watch these again, you can't remember what you were thinking. So we'll write continuation, right? Continuation. Interest up, price down. It's going to keep doing what it's doing. Okay. More down to come. What about a different one, right? Let's look at a different chart. Let's just throw up any other chart. How about XRP? Everybody's favorite, XRP. Want to see some crazy stuff? Look at the number over here in the corner this time. $325 million. Whew, goodness gracious. People aren't playing around, are they? So that's a lot of money to me. As you see, even though you've pulled down pretty hard recently right here, this is pulled back pretty dramatically. Look, you're still trending up. And I know this has come down recently, but if you go back and run the back testing on this, you'll see more often than not it plays out. It's still under trend. You've got downward price action on the weekly, falling price. You have still rising, if not barely, still rising interest, short buildup, bearish signal. We have to own it. So let's look at a scenario where that might be different. Okay, let's go to daily because that's a different time frame, right? Yeah, it's a different time frame. All right. So let's step down here. Let me grab my chart because I can't even see it now. Let's reduce the size of our scale chart here real quick. Right, like that. Put it down here. We can see it. There we go. That's better. Don't want to get lost there, so we can see what we're comparing and contrasting to here. All right. So now you're seeing on the daily chart here, sure enough, price going up, but on a shorter time, since it looks like, let me draw a vertical line right here. Vertical line, let's grab it right there. Looks like since about this point on Sunday the 25th of September, the interest kind of started changing. You had rising price, but falling open interest, short covering, uptrend will not continue. And what has happened? Sure enough, your price was going up, clear as day. On a shorter time frame, your interest fell. So you had rising price, falling open interest, short covering, uptrend will not continue. It's just shorts covering up their position so they can stay in the game. When we cross trend lines and we break, does that change things? Well, yeah, it does. I think Matic has perpetual futures available. Let me see. They sure do. All right. So here's a totally different case, right? Here's Matic. That's clearly a broken trend. We can't argue about it. No matter how you want to draw it, if you want to draw it this way, it's still broken. Trend's still broken, and it still started moving up on its own, doing its own thing here. All right. You can't argue here that this is a clear-cut signal of rising interest, and it's been rising since about right here. See that? Price started, interest rates started rising, interest amount started rising about September 29th. Okay. And from there, what happened to the price? As you see, price has risen in that same time period. Okay. Same time period, price continues to rise. If we have, let's pull it up for you here so you can see. I'll pull it up on the chart. Don't want you to miss out on what I was saying. We'll pull it up here. Open interest. Okay. There we go. By the way, if you want to know how to do pictures on TradingView, there you go. You just go over here to the side where the text is, and you go down to image, and it's got to be a PNG or a JPEG less than 2 megabytes. You can put the picture up there on your screen for you in case you were trying to remember something. There's your quick tip for you, by the way. Rising price, rising open interest, long build up, bullish signal. This is likely to continue until this interest rate falls off or the price falls off and you get divergence on your little chart right here. You're to continue doing what's happening. It's trend dependent. It kind of gives you the sentiment of, is this thing going up and going to keep going? Is this thing going to stop and fall flat on its face? Is this bull market time? Is this time for it to go, right? That's where we have high time frame charts. Let's look at the monthly real quick and I'll show you what I'm talking about. We look at monthly. It ain't going to look great. We'll scroll this in here where you can see it really well. This is very clearly rising price. I'm sorry, rising open interest. And very clearly, you're making lower highs and lower lows on the monthly. No matter how you want to draw this trend line, I don't care. It's still pointing down. You clearly have the divergence that you're looking for. Now let's pull up our little chart scale again right here for you. There it is. When you have falling price and rising interest, that is a short build up and a bearish signal. Please use this at your own behest. Do not use it like it's the Bible. I don't think that's the right thing to do. I think it's probably smarter to use this along with your trend analysis. See if the short buildups are happening or the long buildups are happening or the continuations are happening, and play it smart. Don't be silly with it. Now, the second option, if you don't want to do an indicator and you have the upper level trading view and you can split your screen, I'm going to show you now how you can have open interest on the left or right, or the chart on the left or right in large form here. So it's much easier to see and you don't have to use an indicator slot. Your choice, but the chart is on the TradingView thing as well. Just like the regular chart is, you can look at perpetual futures and the open interest chart rather than an indicator. And I'll show you now. All right, back to TradingView again. Like I was saying, if you have the ability to, and you can split your screen, here you go. Matic USDT perp open interest. That's just a matter of typing in USDT, Matic USDT perp. And then there's only two things here. And these are both Binance charts. And if you don't use Binance, I don't necessarily think that matters because open interest is open interest across the board. Whether you're using KuCoin or MXC or OKX, I don't think that necessarily matters. The point is to get the sentiment. And Binance being one of the larger exchanges, I think the data here is going to be a little bit more accurate than it will on the smaller ones anyway. So I wouldn't stress that it's not your exchange. All right. So on the left, I have the regular Matic perpetual futures chart. On the right, I have Matic open interest. Now I have no indicators. Now it's just two screens side by side, and I can roll my cursor back and forth as you see, and it rolls through on both. Let me take my camera away here. So this is the same point right here I marked before, the September 19th area. On the exact same other side of here, as I roll my cursor over, you see it start to match. It matches right there. Okay. So right about when the chart started running up, interest came up. And what does that mean? Rising price. Make this nice and large for you so you can see. Rising price, rising interest, long buildup, bullish signal. Not really that complicated, is it? I don't think it is either. So, again, I don't want you to go ape crazy with this. It's just simply one strategy and one extra notch in the belt to be able to look at it and go, what is the bigger, smarter money doing? All right. Here's your chance to know. If they're covering up their shorts because they know they're still short, if they're covering up their longs because you know, even though we're pulling back, we're still long, here's your chance to figure out how it's working and know it. If you have questions and you can't figure it out, please jump over in our Discord and ask. There's a link to the Discord in the bottom of this video right now. It is free to come in there and join and ask questions. This instructional video will be posted in there before it hits YouTube. So please don't be afraid to ask questions. If you want to join our Discord, the entire month of November and December of 2022 are free. All you have to do is sign up and you get both months free. And if you don't like it after 60 days, you can cancel. Up to you. Thank you for watching. See you on the next instructional video. Peace.